In this presentation, we will record sales on account, increasing sales, increasing income, selling inventory with an invoice within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We are going to be entering an invoice. Typically, we can do that by selecting the plus item up top, going to the customers and entering the invoice for that customer, the invoice being the form that will increase sales, increase the accounts receivable, meaning we're billing a customer for something that we have done, not yet having received the payment. I'm going to close this out and look at another way that we can go into the invoice. That would be from the sales on the left side. And if we go to the sales and we look at all transactions, we'll see all the transactions, and we could scroll up to the top and then go to a new transaction and select the invoice from the screen as well. This is often a common way to go to that same invoice field. Here is our invoice field. We're going to create an invoice, meaning the invoice does mean accounts receivable will be going up, the other side going to some kind of sales or revenue. We're looking for music store stuff, so there is music store stuff, or we could just type in and it will start to auto-populate for us. So there we have it. The email address, we're not going to enter one. We have the billing address here. The invoice date, we're going to say is 02/19/19, so that's February 19th, 2019. The due date then 30 days later, or 3/21. We're then going to scroll down to the product or service. We will be selling a product, selling a guitar. We'll select the drop down. We're looking for an Epiphone Standard Pro. So if we look here, it's the Epiphone, the Epi Standard. We can start to type that in, the Epi Standard, and that should give us the Epiphone Standard Pro. That's the one we want. We can then select that through the auto population. There's the sales, there's the quantity. It's going to be one that we sell, the rate given to us through the product that has been entered, the item of the product, and there's the amount of the 600 for that one guitar. We're going to say that there is tax on it. If we select or click off of the item, it will then calculate that tax based on the location. We are then going to adjust that to a flat rate, a flat 5%. We'll do that by selecting the sales tax, and then we'll scroll down and we'll go to override, and we want to change this rate to 5%. We're going to override it to 5% and confirm the override. We're also going to change the reason to other, and then confirm the override and close. Remember the journal entry: every time we enter an invoice, increasing accounts receivable by the full amount, that being the 630, increasing revenue or sales by the amount that we get to keep, the 600, the difference increase in the payable, that being by 30, also increasing or decreasing the inventory by the cost of goods sold, an amount not here, but known by QuickBooks due to us entering the inventory item, and increasing cost of goods sold, decreasing the net income by that same amount, by the cost equal to the decrease in inventory. We're going to go ahead and save and create a new invoice now. So we're going to create another invoice. So we will say save and new with the drop down, or drop up, save and new. And the new invoice that we will be creating will now be going to Smith Guitars. So we're going to select the drop down and see if Smith Guitars is there. We may not have it. Well, there's Smith Guitars. So we're going to type in Smith Guitars, and it will then populate for us. We will select that item. The date we're going to say is on the 20th, so I'm going to select plus to bring it up to the 20th, so it's the net 30 on the 20th, bringing the due date to the 3/22. Then we're going to scroll down to the product or service, selecting the product or service. We want an Epiphone semi-hollow body, so we're looking for the Epiphone semi-hollow body. Here it is. So it's an Epi. If we typed in Epi semi-hollow, semi-H, so that's the one we want. We'll select that item. It's a Epiphone semi-hollow body, and then we've got the one of them, $400 amount and 400, so that looks good. We're going to click off of it so it collects or calculates for us the sales tax at the 35 for New York, where we are at. We are going to adjust that to a generic 5% for our problem by selecting the sales tax down below, by scrolling down and saying we want to override 5% The reason being because it's a practice problem, generic problem, confirm the override, and close. So journal entry, once again, the invoice means accounts receivable is going to go up. Accounts receivable for Smith Guitars, sales is going to go up. However, accounts receivable goes up by 420, sales goes up by 400. The difference of 20 goes to sales tax. Then we're going to have inventory going down by whatever the cost of that guitar is, known by the system, not by us. And the cost of goods sold, the expense goes up, bringing net income down by that same amount, not seen on the invoice. Now we're going to scroll down and save and close. So we'll save and close this item. And then we'll go to our reports on the left side. Within the reports, we'll go to the balance sheet. Within the balance sheet, we will scroll up, changing the dates from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. Within the balance sheet, we can see that the accounts receivable should go up by those two invoices if we select that accounts receivable. Scroll down, we had the music store stuff and the Smith Guitars, so the 19th and the 20th. Here are those invoices, the 630 and the 420. If we select one of them, we scroll down and we can see that's going to be for the full amount that is due. If we close that back out, that's the 620 and the 630 and the 420 over here. And scroll back up, go back to our report summary. Now we'll open the income statement or profit and loss and see the other side. We're going to do that in a new tab by right-clicking the tab up top, duplicating it. I'm going to move this one to the right, so we have two tabs, balance sheet on the left, income statement on the right, or it will be once we go to the reports down on the left side. Then we're going to go to the profit and loss or income statement. We're going to change the dates up top from 01/01/19 to 12/31/19, January through December 2019, and run that report. We scroll up top, we see the sales of product. We're going to select that item. Scrolling down, and we see the two amounts, 600 and 400, those being smaller than the receivable because of the sales tax not being included. If we choose the 400 this time, we'll see the difference is the $20 between the amount we're going to get, the amount that's actually included in sales. Closing this back out, going back to the report. We then go back to the balance sheet to find where that difference will be, and it of course is in the liabilities as the tax payable, something we owe in the future. We won't go into that now. It should be there. We've seen it multiple times. The other side of this is going to be inventory going down. So inventory is here. It should be going down by these sales because we sold inventory and therefore don't have it on the books, and therefore the assets should be decreasing. If we scroll down, here's our two inventory accounts, the 480 and the 320. Once again, these amounts are different, or this time at least, these amounts are different than anything on the invoice. That 320 right here, if we go to the invoice, don't see it on the invoice. Why? Because it's the cost. We don't want to give the cost, what we paid for the guitar, to the customer typically. We only want to give the sales price, but the system knows how. It knows through us entering the product when we entered the product, and therefore records the decrease in inventory as we enter the invoice. If we close this back out, we also know that it records the related cost of goods sold. Back to the report. That's on the income statement or profit and loss. Back to the second tab to see that. We'll scroll back down and we'll say on the profit and loss in the cost of goods sold, selecting that item, we see that same amounts for the 480 and the 320. If we select either of those, let's select the 320. We will see as we scroll down that we don't have 320 on the invoice because once again, that's the cost of this guitar. The system knows it. It's not on the invoice. However, if we wanted to look it up, we can look up the item and see how we entered that data and where it's coming from to record this amount within the QuickBooks system. For more accounting information and accounting courses, visit our website at accountinginstruction.info.